What's up, everybody? Welcome back to HPT. I am your host, Joshua Salvetti, and today we're going to be breaking down a phenomenal tool that I love to use each and every single day. First of all, I just want to give a massive shout out to everybody, right? Massive shout out to all my followers, massive shout out to every trader out there. Trading is one of the hardest things in the world. And it's because we overcomplicate it. And today in this video, I really want to talk about that, right? I actually made that mistake today. I was overthinking things, right? I was second guessing. I was focused on the negative. And I want to show you guys a tool that I use that keeps me from focusing on negativity, okay? Because negativity is going to cost you so much, right? And when I say the words negativity, I'm talking about worrying about things we can't control, okay? Hyper-focusing on negative outcomes, okay? Oh, what if this goes against me, right? What if I end the day red, right? What if this trade doesn't work, right? Whatever, all those negative indications that we constantly have going through our mind, right? That costs us so much, right? Because what it does is it puts blinders on you. You see this amazing opportunity, and then that negativity comes in, and then your blinders go on, and you get in a beautiful trade, and then you get out quick, right? Or you get in a great trade, and it's going in your favor, and you take profits extremely fast, right? Or even worse, you're in a losing position and you can't see things properly because the negativity, right? You don't want to stomach the loss. So then the trade goes against you and then you make a horrible decision, right? So there's a couple things that really help me snap out of it, okay? And that's what I want to talk about today in this video, right? Because negativity has cost me years of good trading results, right? And it actually took me a long time to snap out of it and reprogram how I view the market. So I want to talk about that today. And I titled this video, Trading Using the 2-Minute 20 EMA. Okay. The 2-Minute 20 is a godsend. Okay. And I want to talk about it, right? Because the 2-Minute 20 is one of the most effective tools I've used in a long time. Now, you guys know how much I love trading my strategy, the HPT cross. But the truth of the matter is, the HPT cross is a phenomenal strategy, right? It's amazing. 82% win ratio, shows up 82% of the time, right? It's a phenomenal strategy. But we need other tools as well, right? If I go to today's price action, we got no HPT cross, right? There was no moving average cross. So once again, it's not always going to show up. We need other tools. And the HPT cross, the whole study is focused on the morning session, right? That's between the hours of 9:30 and 12. So we need tools that get us in and out of the market later in the day. And that's what I want to talk about today, right? The 2-Minute 20 is such a powerful tool. If you look at this chart in front of you, just look at this, right? Look at how the 2-Minute 20 held beautifully right here, held right here, held right here. I took a little trade right here because of the 2-Minute 20. Look at held right here, okay? The 2-Minute 20 is a godsend. Now, my boy Todd from Louisiana, he said it in such simple terms, right? And it's got to be simple, right? Because if it's not simple, we'll complicate the hell out of it, right? The 2-Minute 20 is effective only when it's being respected, okay? So once again, it's not always going to be respected. Look at this price action here, right? Right here, the 2-Minute 20 is not being respected. Does that mean it doesn't work? No. That just means don't use it. You see what I'm saying? Right? Like if it's not being respected, don't make a decision because of it, right? Maybe look for different criteria, right? But when it is getting respected, like right here, this is something we got to watch, okay? Now, once again, we have to be smart enough. Let me rephrase. we have to be conscious of the 2-minute 20 and if and when it's being respected. And when it is being respected, okay, you got to ask yourself, right? Do I want to use it? In the question. See, it gets funny because everybody that's on my team knows I don't teach my new students the 2-minute time frame, because the 2-minute time frame, if you're not using it properly, you're going to get smoked. Okay. Now, the 2-minute time frame is going to give you great criteria, but it's very hard to distinguish a healthy trend when you're on the 2-minute. So you have to use larger time frames, right? So let's talk about it. Let's talk about yesterday. So yesterday I took a couple trades. The ones I want to talk about, which ones? I took a long here. Where's it? Right. I took this long here, right here. This pop at the end of the day. That was a beautiful, beautiful trade right there. And I also took a long right here off the 50 EMA right here. Okay. Now, once again, moving averages are a beautiful tool, going back to what we were talking about earlier, right? Because earlier we were talking about the negative thoughts, right? When negativity comes in your mind, okay, we need tools that are going to keep us from the blinders, right? The negative thoughts come in our mind. We start getting scared. We're like, oh my God, what if this goes against me? A big one that used to happen to me is I would get my account balance higher than usual, right? And once my account balance started to get a little higher than usual, that's where I would start to see certain self-sabotaging behaviors, right? Now, what we have to do is pull ourselves out of that state of mind, right? When we have the blinders on, we need a tool that pulls us out of that state of mind. That tool is going to be moving averages, okay? Moving averages are going to help you do that. Now, I know everyone's like, Josh, well, moving average, what do you mean? Like, how is that going to pull me out of the negative state of mind? And the reality is, it's because the moving averages aren't going to lie to you, right? But you have to understand how important larger time frames are as well. So let's go through some examples. Okay, so first thing I want to talk about was yesterday's trade. I took a long right here at the end of the day. This trade right here on SPX, it paid beautifully, right? Now, I want to talk about it. What are some things here that led me to take this long off the 2-minute 20 pop? Okay, so first things first, 1 hour time frame's key, right? Why is 1 hour time frame important? Because it gives us context. Okay, if you're not trading using the 1 hour moving average, you don't understand the full story. Okay, that's when you're going to get caught in fake outs. That's when the 5 minutes going to give you a great setup. You're going to get in it. It's not going to go your way. You're going to be like, what the heck? And the reality of the scenario is it's because the 1 hour wasn't aligned, right? Now, everything's got to be aligned. It's like using a telescope, okay? Say you're using a telescope. Say you want to look at the moon, okay? And you pull out your telescope, and a telescope, for those that don't know, has multiple lenses in it, okay? There's a lens in the front. There's a lens in the middle channel there. And then there's a lens you're looking through, right? So there's multiple lenses in a telescope. Now, if you go to use that telescope and the lenses aren't aligned, it's not going to be in focus, okay? If it's not in focus, you're not going to see properly, right? That's why you got to adjust it. When you're putting a telescope together, there's multiple variables that go into using it, right? It's the same with anything in life. When I worked at JMA and we built antennas, there were multiple components that go into an antenna, more than 200 to be like, there's literally over 200 components that go into one antenna. Okay. So for the antenna to work, The pathway, meaning the input, the port on the outside, it goes interface of the port through all this cables, PCB boards, all these different configurations that create this device, right? So there's multiple components that all need to be aligned, okay? Now, Josh, why are you talking about antennas? Because if you want the system to work properly, everything has to be aligned, okay? So trading, when I'm looking at this chart, right? Look at this bounce right here off previous day high yesterday. Now, if I whip out the 1 hour time frame, I can see the trend is valid. Okay, look, valid trend. We're not getting that extended. Okay, we got a little RBI right here, this little doji on the 1 hour. It's just been ignored. We got a healthy trend here. What else about this 1 hour can we use? Well, we're actually closing above previous day high. We're coming into it. It's a healthy trend. Now, using that 1 hour, we can now drop to lower time frames and go, okay, say the market looks like this. You're like, oh man, I want to get in this. We're on the 2 minute. But look how far away we are right here from the 1 hour, okay? Right here, we're about 74 cents away. So that's when I go, you know what? I'm going to stay patient. I'm too far away from the 1 hour time frame. I'm going to wait for the 20 EMA retest on the 2 minute. So once again, I understand that the day is bullish and I want to get into the market. But I'm a little extended from that 1 hour. So what do? I'm going to wait for the 20 EMA retest. Price comes down, comes into the 20, and we get strength. So when you see something like this, you can confidently go, okay, I'm going to hop in the market long here, and my stop will be outside the 20. We're playing the trend to the upside. The 1 hour trend is valid, okay? And now let's see what the 5 minute looks like. RBI. Boom. Look at that. Red bar ignored. That's a phenomenal long play. So now I don't want you to go trade tomorrow and try to align everything and look for all this extra confirmation. I just want you to use the 1 hour, the 5 minute, and then identify good opportunities off the 2 minute. 20 EMA. I will only ever trade the 2 minute if it's bouncing off the 20. Right? Now look at the trade we took right here. Price rallies up, right? We're getting a strong push. Let's look at the 5 minute. 5 minute looks something like this. Now, just to point it out, this is a clean break and retest here off this little level of structure, okay? So now I can't be bearish until that breaks, okay? Until this little support with resistance, which is now support, until that breaks, I'm going to stay bullish. So we come into it. Boom. Do I go long right here? No. Why? Because it's not off the 2 minute 20. And what does the 5 minute look like? The 5 minute looks like this. I'm not longing that. Okay? That's not valid. There's no RBI. There's nothing. Okay. Come into the 2 minute 20. Now this is make or break. If sellers take it, now we know that they're strong and we should sit on our hands and wait for a bearish setup. Okay. But sellers don't take it. Buyers take it. How do we know? Well, we get a clean RBI on the 2 minute, but more importantly, we're bouncing off the 20 EMA. Okay. Roderick, what's up, buddy? Got faked out on that first RBI on the 5 minute today before the rip. Let's take a look at it. Yeah, today, so any day there's no moving average. Let me see what RBI you're talking about. Okay, so you said got faked out on that first RBI on the 5-minute today before the rip. Oh, this one, right? This 9:55. That's tough. That's a tough one. It's right off open print, too. Look at that. Now, all right, let's talk about it. This was a great trade. That was a great trade, though. In my opinion, that was a phenomenal trade. Let's go over it. I'm going to tell you why I like this trade. Yeah, it didn't work today. But more often than not, that setup will pay you extremely well. So if you took an L on it today, you know what? If you followed your risk reward properly, if you kept your stop loss right below that RBI and you got stomped out, you know what? Good for you, bro. You had a phenomenal, repeatable approach that you executed flawlessly on. And look, it's bouncing off. It's literally bouncing off the EMA, the 20 on the 5-minute perfectly. Look at that. Bounce, bounce. And it's off open print. News comes out, right? Because that's what that was. There was news today at 10. Tons of volume came into the market, bounced off the 20. We ripped. We got a nice red bar here. One more thing I want to talk about with this trade. The reason why I like it so much is look where the 1 hour time frame is. Right? You see the 1 hour 9? It's right on it. So if I pull up in the Discord here, hold up. Oh, God. Oh, God. Discord's falling apart. Hold on. I want to show, while that's loading, I'll just say it. So I'm doing a study, right? You guys know I'm collecting data on our strategy, but I'm doing a study where I found when the 1 hour time frame is the 9 on the 1 hour, when it's close to price action, there's a very high chance that price is going to continue in the dominant direction. And look, it did. It did flawlessly. But yeah, today was tough, man. I struggled today. I struggled today. I just moved. And here's me making an excuse, right? But I'm in my new spot now. I love it. It's awesome. And I've had tons of issues as far as Wi-Fi, the bath, all these different issues. So I've had people coming in and out. But the real reason why I struggled today is because I had blinders on. I couldn't see properly. And this is the thing. That's okay, right? Like, we're gonna get the blinders on. What's important is don't go full retard, don't go full size, and don't revenge trade, right? Like, that's literally it. I took 2 trades today. Let's talk about them. I went long right here, right? And I want to talk about it because even with the blinders on, right? I'm kind of like, the market's rallying. The pre-market plan was basically, if we were going to hold, let me show you. So today, the pre-market plan was if we held this zone right here, I was going to be looking for longs, okay? This was the critical level of interest. If buyers held this zone, right, that would be a sign of strength, okay? There was multiple things showing us that buyers had tons of strength too. Look, 1 hour. We have really good structure here on the 1 hour. We're bouncing off the 50 EMA on the 1 hour. See, the moving averages are key, right? Like, if I'm bouncing off the 50 in pre-market and I'm closing above end of day, I wanted to be bullish, right? So price rallies here in the morning. We get a red bar here that's ignored. I didn't take it. I was just like, okay, you know what? I don't want to take it. There was no moving average cross. Let's see what happens. Okay. So price then comes into, I think this is so cool. Look at this. Price comes into the red bar and can't break it. It can't break it. right? Like even with all, like this red candle means nothing to me because it couldn't break this. So we get this beautiful RBI and sellers literally gobble up almost the whole green candle. Now, but they can't invalidate the red bar that was ignored. They can't. They can't. They don't have the strength, right? So at this point, I'm pretty much like, okay, it's going to rally, right? Like if sellers can't take back this level, she's going to rip. It's that simple. So it's like, okay, price rallies up and I can't find any entry. Price is rallying. I'm overthinking. I'm like, dude, I don't know. Now we're far away from the 1 hour. This is happening. All right, just stay patient. And guys, that's fine, right? Like I'm constantly reminding myself, if I'm not getting in the market, like we don't have to make money because price is moving. As a matter of fact, most of my losers come from me forcing trades, which is why I've become super stringent with my entry criteria. Like I don't care. I don't care. I won't take anything. I'm just patient. And then we get some selling here off this level at 59550. This was a daily time frame level. We get some selling. Boom. We get a green bar that wipes it out. So this was my first. I took this long. Now I want to show you on the 2 minute. What is that? 1210. Yeah, look at this. Look at this. Ready? We're long. 5 minute looks beautiful, right? Now watch. Price comes into the 2 minute 20. Now, how can we confidently execute on the 2 minute 20? Because look at how it was respected here and here. Like we come into it. Do I go long right here? No. I wait for this. We blow the top. Boom. It's literally an RBI on the 5 minute. Stop below. I'm just getting in a little bit sooner. And then you use that 2 minute 20 to catch yourself a nice pop. Beautiful pop. Now look at this one. This was another, I took this long as well. So I literally, and now ready guys, even though I missed all this price action, right? I was dealing with Spectrum. I'm fixing my bathtub, right? I'm dealing with all this stuff, whatever. I'm overthinking the morning. Maybe I wasn't even overthinking it. I think I was just being super patient. Like I was like, it doesn't even have to be, I was overthinking. Like I was just being patient, dude. Like you don't need to take a setup. Like it's that sort of thinking that costs us everything. Like, dude, my best weeks are literally when I make 5 to 6 trades, like sometimes less. Like in terms of consistency, we just got to get on base more often than not. Okay. Like, so, like we get this false reality where we're like, oh my God, I got to have a good day today. It's got to be green. Like Roderick, you took a beautiful setup. It went against you. Did you fail? No, you didn't fail today. You literally executed flawlessly. There was no failure. It doesn't matter because more often than not, that setup is going to pay you. So now ready? This is key. As long as you capped your loss and tomorrow when you take the same setup, allow it to pay you, that is consistent profitability. Like consistent profitability isn't I'm green every day. It's not I'm more green than I am red. Okay? Like that's key. That there's such a disconnect there. Like, and that's because most traders are trading for emotions. Okay, they're trying to grab all this dopamine, right? Like, ooh, I'm doing good. I'm green. I'm a validation. Dude, what was it? 3-4 weeks ago, I was taking loss after loss after loss. And then the following week, I had one of the best weeks ever. So in terms of the long-term game, it works, right? So it's just something I always like to talk about, because if we go into the day trying to be green, we can't see shit. We got to step back, because we're so damn worried about losing. We literally manifest a loss. It's crazy, dude. I did it for years. I did it for a long time. So anyways, back to the trade. I took nothing in the morning. And then I finally, okay, we get that. Look at that right there. Bounce. Look at this. This is just so damn beautiful. Bounce. Bounce. Bam. And look, ready? Look at this. Bounce. So if the trend is healthy, right? If 1 hour trend looks good, a 5 minute trend's healthy, get your ass on that 2 minute 20. Hands down. Bounce, bounce, long, and then a long right here. When the 2 minute 20 is being respected, you should definitely be entering into the trade. Definitely. I caught a good one there, and then I got a little greedy. I trimmed my position, and then my runner, I got stomped out. Now look, ready? What's this? Let's talk about this. What's that right there? Ready? Now, this is something we used to do when I was studying radio frequency, right? Now, there's no right answer. There's familiar, okay? So, like, when you're studying RF and you're, measuring, all these different, devices. Now, there's like passing and failure, right? Like when I'm looking at a measurement and it's measuring PIM, and you get a steady noise floor, okay? It's just a line across the chart and it looks almost like waves, right? But it's steady, right? It's got polarity, right? What goes up goes down. Let me show you a picture. Hold on. PIM reading. And hear me out. This is important. Let me see here if I can even find one. K-list. PIM reading. Let me see. It's so funny because there's really not that. Okay, here we go. All right, so this is a good one. All right, so if you look at this right here, right, this is a measurement of PIM, right? So basically, when you look at this chart here, this is a noise floor measurement, okay? Noise floor is deep in the frequency, where it's very clean. It's very familiar, right? Look. We're not getting crazy wild jumps, but it's still bumpy, okay? Right? This is a failure, okay? Look at jump, back, up, down, jump here. There's no familiarity to this, right? There's nothing familiar about it. This is a span over multiple frequencies, and it's failing, right? You're getting different measurements of PIM throughout these frequencies. This is steady, familiar, unfamiliar, okay? This is how you validate radio frequency, okay? Is it familiar? Are we used to it? Right? Now, go back to the chart. Now, when we're looking at this, look at this bounce. Familiar, familiar, familiar. What's this look like? Does this look familiar? No, this is not familiar, okay? This is a sign that things are changing, okay? So we don't want to long this because that's not what happened. I'm not saying this is bad. I'm saying it's not familiar, okay? Like I actually, this is still being respected, okay? It's still telling us something, but according to the previous bounces on today's price action, this is unfamiliar. This is not familiar. We do not want to long that. Okay? And then look what happened. Blech. She fell out. She fell out. So, you know, I just really wanted to break down examples today on the 2-minute 20. It's such a good tool, dude. It's really like, look at here. It's not being respected. Not being respected, not being respected. So we don't trade it. Okay? It's not familiar, right? How about the day before? What day was this? Let's see. Sell off, comes up, rips into the 2-minute 20, rejects. Okay? Nothing here. Boom. Oh, yeah, we took that short right here. I remember. But now ready, look. So, all right, real quick. Let's talk about this day. Because there's a great example here. Where is it? Is this it? Yeah. All right, so 5-minute time frame looks like this. We go short right here on the 5-minute, okay? I drop down to the 2-minute to manage my trade. Why? Because I know if we hold the 2-minute 20, she's going to continue. Price comes up, rips into the 2-minute 20. Do I get out of my position? No. Why? Because this GBI has not been invalidated. And then price rips into the 2-minute 20 and she sinks. So once again, guys, I just wanted to break down the 2-minute 20. It's a phenomenal tool. I highly recommend it to everybody. But learn how to use it. If you have any questions, you guys already know, just shoot me a message. Super pumped for this week. I'm looking forward to finishing this week extremely strong. Don't beat yourself up if you're being patient. And don't look for too much confirmation. Just stick to simple tools to keep them blinders off. Okay, guys? I love you. I'm Joshua Salvetti, and I'll see you in the next video.